Hey, good morning, everybody. So this is going to be the watch list for Monday, August 5th. And as you know, I like to start out with the economic news just to see what's on the calendar. Good news is there's not a lot of things that are going to be coming out, but there's just a few things that we want to be cognizant of. So last week was quite the sell-off, which was led by tech, and then it bled over heavily into the broader market with financials, oil, and the only thing that really fared halfway decently was going to be some of the pharmaceuticals and some of the utilities. But what do we have on Monday? What I would definitely do on Monday is just sit out for the first 30 minutes. I don't think it's worth putting on a trade, knowing that there's going to be two news events that are going to drop. Nothing major, but ISM services and then the U.S. services final PMI. The market is clearly on edge. So the VIX has gone from 12 up to 25.5, and we just don't know how news information is going to sit with the market, which could create even more volatility. So Monday, my opinion is you're just better off to sit and watch, see what happens, and then catch a trade after the first 30 minutes of the market open. Tuesday, U.S. trade deficit shouldn't be anything too monumental there. Wednesday, consumer credit. Again, nothing I'd be overly concerned about. We got a good hint of the consumer when the banks reported their financials over the last 2 weeks. And then Thursday, this is going to be a big one, jobless claims. So the reason the market sold off hard, continuation on Friday, was the bad jobs report number, and that unemployment went from 4.1% now to 4.4, and they're thinking that the Fed should have already started lowering rates. They're going to be too late to the game, and we are going to be in for a hard landing and not a soft landing when it comes to the overall recession. The other piece of news event that I would watch for on Monday is going to be this. Warren Buffett has sold nearly half his stake in Apple, which you guys know is billions of dollars. So he is raising cash. He sold a huge stake in Bank of America, and now to sell half his stake in Apple is probably going to really capture the market maker's attention to say, well, if Warren's going into cash, what does he know that we don't know? So let's take a look at the charts. So clearly, as you know, I like to start on the daily time frame. Couple things that I'm going to do is I'm going to look for my gaps, right? I always like to have my gap fills because they act as magnets and are typically filled 80 to 90% of the time. We have a gap there. We have a gap on the daily down here, which is significantly lower. Let me just line those up for you so you can see this other gap. There's a tiny little gap here, nothing humongous, but it is one that does exist, okay? So we have our gaps. A couple things that I'm going to want to be cognizant of. We're clearly in a downtrend. There was a gap here. It filled to the upside, and then we flushed lower. Overall, on a daily time frame, a couple of areas that I would want to be cognizant of, which are higher levels of overall support, is going to be right here, down at 518. We did push up off of this 528.60. So where do we get that 528.60? Well, the other thing you could do too is that if you want to take a fib from an extreme pivot low to an extreme pivot high, they pretty much line up pretty darn close. So we are holding that 50 fib level. If we fail the 50 fib level, then I would be looking for us to go from 529.51 to start heading to 521.10. Let's move this down to an overall 1 hour time frame and just see again, where would I want to go short? I would want to go short once we get a break below that 528.60. And then overall, I think we do have some market momentum to the upside here. The question will become is, do these levels start to hold? So instead of a 1 hour, I would look at a 4 hour. Do we have some multiple touch points? And that's what you're always looking for levels of support. You know, a good area where we were able to hold. Yep, pretty much right about here, right? At about 524.73, areas of interest. We came down, we held, we flushed it. We then used it as support, support, support before we moved higher. So these would be the levels that I would be watching on SPY to the downside. Do we not hold this 50% fib level? And if so, you could then consider going short. And my first price target would be this 528.60, which you're going to get some resistance off because we pushed up fairly hard on the market close on Friday. But if we fail that, then I definitely think we're headed closer down to this 524 number. We can look at it on a 1 hour. I really don't see anything that's going to be, significantly monumental. We had a little bit of a shift here where we pushed lower and then pushed higher on volume at 526. So you're literally just trading these level to level to level. If one fails, we go to the next. This one fails, we go to the next. This one fails, we go to the next. So on and so forth. Let's do the same thing if we could on QQQ. Let me clean this up for you if I could. Now the Qs is interesting because it has lost significantly more ground than SPY. And why is that? Because technology has sold off hard. So a couple of things with this that I want you to take a look at. One, we've had this price level where we were using it as resistance on the daily for multiple days, right? And then we finally broke it and it became support. And now we are closing literally right on that level. So if we fail this level, what do I want to be aware of? Well, I do want to be aware of, as we've talked about before, where are my gap fills, right? Do they always close in a day? No, but they start to act as magnets. This is not a gap, no gap. This gap here, nope. This wick would have filled it. You can see we come down, we grab liquidity, push the market higher. Now we do have a gap to the upside, which if there is extreme reversal and the market decides to move higher, then this would be an area that I would be watching, as well as a little small area right about here, right? What I don't like about this daily candle is this is pure indecision, right? It's a red candle, so we closed lower than the previous day, but they wicked it all the way up, they pushed it all the way down, they pushed it back up above the prior resistance line that turned to support. So we're going to want to watch this fail, the 448.64 to then head lower. Let's look at it on a more granular time frame to see, do I have another level here? Well, where did they push it up as well? Right here at about 433. So that would be a stopping point for me. Where was the next level that they push it up fairly hard? 440. And then the next level below that is 437. So you can see every 3 points is kind of where the market will trade. And notice how these are pretty much equidistant to one another, right? It's moving up, basing, moving up, basing, moving up in the past. Well, let's look and see if we're going to start to fail. What I want to see is a hold and close below this. And then this would be the first area, 443.06 is where I might anticipate a bounce. Do I think the Qs are going to open lower? Most likely because of Warren Buffett's news of selling half his shares in Apple, right? So we fail this, we come lower, we fail this, we come lower. Now, could we get above this? Absolutely, and bounce to the upside. The other thing that I would note, if you look at this on an overall daily time frame, we've done a complete round trip from this 443 level all the way up to 504. We now have a 10% sell-off. Again, if there's nervousness in the market, this thing is probably going to push lower before it moves to new all-time highs. Let's take a look at Apple just for fun, because this is one that I would keep on the radar. Here we go. Let me remove these previous price levels. They had earnings. Earnings were decent. They were not stellar. They beat by 4% on earnings and 1.5% on revenue. They pushed it all the way up, but again, it was not able to hold. So what would I watch for Apple? Well, we clearly have a trend line here, right? There we go. So I would be going short if we break this trend line. And where would I look for us to go to? The prior pivot where we came down to before we started to move higher, which is about 210. Could you get that? Absolutely. Now, are there going to be buyers between there? There are. But again, if Warren Buffett creates enough noise with him selling half the position, which is billions of dollars, I definitely think we're coming down. And you'll note that my pivot matches up with the overall demand on a 3-hour and a 1-day time frame. We fail this, then I think we're coming lower down here into 204. We lose 203, we're going back down below 200, right? Where you again have 1 day, 4-hour, 30-minute overall demand. So keep an eye on this one. I think it can be an opportunity. The other one that was brutally hit hard was Amazon. Amazon had lower AWS revenue than what the street was expecting, and it sold off hard. Now, the thing that's not helping this is Jeff Bezos sold a ton of his stock up here at about 200. So this leaves a very, very nasty gap right above, right? And this is a huge gap that over time, will eventually be filled. Now, again, it was down 12%. I think it finished down just over 8%. But you do have a little bit of a gap that was here that is still open, right? The gap was normally this, but you can see that they wicked down into it. So now technically the gap is very tiny. So it could push down, fill that, close it, and then if it heads lower to the downside, because we have, more selling on the tech, I think then we would look at 154.81. The other one, tons of volatility, NVDA, that was just on a tear, craziness. We do have a gap below, right? You'll note that what will also happen is a stock will bounce off the top of the gap. And what you're going to want to watch for is a short position that if you start to push into the gap on weakness, then I would look for it to fill. Now, are we going to watch it on a 1 day? No, we're going to probably be watching it more on a 5-minute time frame. But look at the gap. It drew the gap and it exists. It did push down into it pre-market. For me, you could see it happened here again. It happened here again. And then where are we going? Are we moving back up? Well, not necessarily. It did find some support back here before the market close. Now, look at what it did. Supported and then reject. It made it above it, but it couldn't hold. And now we closed just above it. So this would be kind of your line in the sand, 106.73, to say, can we move higher? I probably would not take a long entry on this until you can break and hold above this 108.72, because clearly they were able to push it up, sell it off, and now we're just kind of trading. If we break below 106.73 on weakness, then definitely that 102 would be target number 1, and then down into the 90s for your second level. So that's just kind of what I'm watching. Again, it was a very, very broad sell-off on Friday. Everything in technology, the banks, the energy stocks, Wall Street's premises, the Fed should have already started lowering. Therefore, we're going to hit this hard landing. Unemployment went from 4.1 to 4.3, and we'll kind of see how this week plays out. But be patient with your entries and your exits. Volatility is extremely high, so option prices are elevated. You need to stay at the money or 1 out of the money. Don't be going 2 and 3 out of the money because the contracts are cheaper. All you're doing is introducing more risk to yourself. Why? Because if the stock moves in the opposite direction of the contract you're in, then the overall decay is going to happen so much faster with delta. You're going in the wrong direction. And then as the day progresses, theta starts to eat into that as well. So these are some of the things that I'm watching. Be patient, watch your levels, and then you have to give time to trade. So don't get into a trade and then automatically just drop a stop loss at 20%. I promise you, you're going to get stopped out. And you're going to get stopped out because of the volatility and how much premiums are moving. Watch the charts. Don't watch the price of the options contract. So hopefully that helps. And I hope you all have an amazing weekend. Take care.